What if I told you there's an account where your money grows completely tax-free, and you never pay taxes on it again? Not when it grows, not when you take it out in retirement. It exists. It's been available for decades. And most people either don't have one or opened one and don't really understand what it is. It's called a Roth IRA. And if you're a millennial in your 30s, this might be the single most important financial account you can open right now. Here's why. Here's what we're covering. First, exactly what a Roth IRA is and how it works in plain English. Second, why your 30s are actually the ideal time to open one, better than your 20s in some ways. Third, how much you can contribute and the income limits you need to know. Fourth, what to invest inside it, because the account itself isn't an investment. And fifth, how to open one today in about 15 minutes. No jargon, no complicated tax code, just a clear explanation of one of the best financial tools available to regular people. Let's get into it. IRA stands for Individual Retirement Account. It's a special type of investment account with tax advantages built in, meaning the government gives you a break on taxes to encourage you to save for retirement. There are two main types, the traditional IRA and the Roth IRA. The key difference is when you pay taxes. With a traditional IRA, you put in pre-tax money. You get a tax deduction now, but you pay income taxes on everything you withdraw in retirement. With a Roth IRA, you put in after-tax money. No deduction now, but everything that grows inside it and everything you withdraw in retirement is completely tax-free forever. Think about what that means in practice. If you contribute $6,000 a year to a Roth IRA starting at 30 and it grows to $400,000 by the time you're 65, you owe zero taxes on that $400,000 when you take it out. In a taxable account or traditional account, you'd owe potentially tens of thousands in taxes on that same withdrawal. The Roth wins when you expect to be in a higher tax bracket in retirement than you are now, which is true for most millennials in their 30s who are still in their peak earning years ahead of them. A lot of financial content tells people to open a Roth IRA in their 20s. And yes, earlier is better in theory, but here's what's actually true about your 30s. You have more money to contribute than you did at 22. Your income is higher, your spending is more stable, and if you've been following this series, your budget is under control and your debt is shrinking. You have real money to put to work. You still have 30 to 35 years of compound growth ahead of you. That's an enormous runway. The difference in outcome between starting at 25 and starting at 32 is real, but not catastrophic, especially if you contribute consistently from 32 onward. And crucially, you're now more likely to stay consistent. A lot of people who open Roth IRAs in their 20s contribute for a year or two and then forget about it when life gets busy. In your 30s, with a real financial system in place, you're more likely to max it out year after year. Consistency beats an early start with inconsistent contributions almost every time. For 2026, you can contribute up to $7,500 per year to a Roth IRA if you're under 50. That's $625 per month if you spread it evenly across the year. There are income limits. If you earn above a certain amount, your ability to contribute phases out. For 2026, the phase-out begins at $153,000 for single filers and $242,000 for married couples filing jointly. If you're above those thresholds, there are still strategies available. Look up Backdoor Roth IRA. But for most millennials in their 30s, you're well within the contribution range. A few other important rules. You can only contribute earned income. If you make $4,000 this year from a part-time job, you can only contribute up to $4,000, not the full $7,500. The contribution deadline is tax day, usually April 15th, for the prior year, so you have until April 2027 to make 2026 contributions. This gives you flexibility if you can't max it out by December 31st. You can withdraw your contributions, not the earnings, just what you put in, at any time without penalty. This makes the Roth IRA more flexible than most people realize. It's not completely locked up until retirement like a 401k. This is the most misunderstood part of the Roth IRA. The account itself is just a container. It's not an investment. Opening a Roth IRA and putting cash in it without selecting investments is like buying a refrigerator and leaving it unplugged. The account does nothing until you choose what to invest in. So what should you invest in? The same answer as last video: index funds. If your Roth IRA is at Fidelity, put it in FXAIX, their S&P 500 index fund, or FSKAX, their total market fund. If it's at Vanguard, VOO or VTI. If it's at Schwab, SWTSX or SCHB. If you want the absolute simplest option that requires zero thinking, look for a target date retirement fund. These are single funds that automatically adjust their investment mix as you get closer to retirement. More aggressive when you're young, more conservative as you approach your retirement date. Pick the one closest to the year you plan to retire, something like FDKLX for Fidelity 2055 if you plan to retire around 2055. Set it and truly forget it. The most important thing, don't leave the money sitting as cash inside the account. It must be invested to grow. If you already have a brokerage account from last week's video, check if your broker also offers Roth IRAs. Fidelity, Schwab, and Vanguard all do. You can open a Roth IRA alongside your regular brokerage account at the same institution, which keeps everything in one place. Here's the exact process. Step 1. Go to fidelity.com, schwab.com, or vanguard.com and click Open an Account. Step 2. Select Roth IRA as the account type. Step 3. Fill in your personal information, name, address, social security number, date of birth. Step 4. Link your bank account for funding. Step 5. Make your initial contribution, even $50 to get started. Step 6. Select your investment. Don't skip this step. Search the ticker for your chosen index fund and place a buy order. Total time, 10 to 15 minutes. The hardest part is choosing which brokerage. Everything else is filling out a form. Set up automatic monthly contributions after opening. Even $100 a month into a Roth IRA invested in an index fund, compounding for 30 years, builds meaningful retirement wealth. The goal eventually is to max it out at $7,500 per year. But $100 a month is infinitely better than waiting until you can contribute the full amount. Let's bring it together. A Roth IRA is an individual retirement account where your money grows tax-free and withdrawals in retirement are completely tax-free. You contribute after-tax dollars now and never pay taxes on the growth. Your 30s are a great time to start. You have real money to invest, 30 years of compounding ahead, and you're more likely to stay consistent. Contribute up to $7,500 in 2026 if you're under 50. Income limits apply above $153,000 single or $242,000 married. Invest inside the account. Don't leave it as cash. Use index funds or a target date fund. Open at Fidelity, Schwab, or Vanguard. Takes 15 minutes. Start with whatever you can and increase over time. Hit the subscribe button. New video every week. Next week is a practical one. How to spend less on groceries and everyday expenses without feeling like you're giving anything up. Groceries are one of the biggest variable costs in most people's budgets, and there are real strategies that save hundreds a month without making your life worse. That's next. See you then.